What's up, everybody? Welcome back to Tick Talk by the Investing Circle, the personal finance site that just makes sense. Today, we're talking about how the SEC is on life support. And it's funny because if you listen closely, you might actually hear the sound of our justice system working. So if you followed the crypto industry or really any mainstream media outlet for a little bit, you already know the SEC just took one of the largest losses to date against Ripple. Ripple and XRP were just one of the companies and cryptocurrencies targeted by the recent onslaught of litigation by the SEC targeting exchanges like Coinbase, denying Bitcoin ETFs and other assets. With the Ripple win, the people, in quotes, are actually pushing back against the large regulator and winning with the support of our justice system. I could be wrong, but I believe that's how the justice system was supposed to work. One entity versus the other entity, and whichever one actually aligned the most with current laws won the case. So what's the actual big problem? Why is everyone all upset and paying attention to this kind of thing? Well, the SEC has been attacking an industry it clearly doesn't understand while using the cover of helping the retail investor drop the hammer. This has always been the goal of the SEC, to protect the retail investor and regulate the public securities market. The last part is kind of an issue because the crypto world is not really regulated, primarily because cryptocurrency was designed to be decentralized. Since the government hasn't figured out how to regulate this newfangled technology and asset class, the big brother SEC has stepped in. Instead of figuring out how to classify these and creating a new framework, it seems to be easier to just attempt to call them all securities, sue them all, and take a vacation on the proceeds. That's finally starting to change. The Ripple win was just the first step in putting the SEC in their place, with Judge Torres saying retail sales of XRP were not deemed investment contracts and XRP as a cryptocurrency, not a security. Based on the information provided to the judge and applicable law, she came to a clear conclusion that XRP does not constitute a security. The case is still going to a jury trial, I believe sometime in April, for institutional sales, but the question about whether or not XRP is a security is actually no longer a question. Judge Torres delivered a win to Ripple and the entire industry using objective information while also putting the SEC in their place. The second win that proves the SEC has been exposed and the justice system is finally working was just a little bit ago, after, of course, the XRP win, with the Grayscale versus SEC case. Grayscale had the rejection of their application to convert their Bitcoin trust to a Bitcoin ETF overturned. While Grayscale doesn't automatically get the application approved, it forces the SEC to re-examine the application, and with the judge's comments, it seems the SEC needs to start actually understanding what they're rejecting. Most say an ETF would allow retail investors indirect exposure to the volatile crypto markets through a common, safer medium, the stock exchange. Just 3 days after the win, the SEC announced it'll postpone decisions to approve these applications and requests about 45 days to examine multiple applications, including some from WisdomTree and BlackRock. Seems like the justice system and the community are finally winning against a much larger bully with strong information and arguments. So what's next? Will we see the regulation in the crypto industry? Maybe. Big question mark there. Will it be the SEC? Most definitely not. And should we celebrate? 100%, especially if you're in New York and you got to experience the Ripple party. That's all I got for you guys today. Thanks for stopping in and listening. If you got any questions or comments, please leave them in the comment section below. If you'd like to be an author for our site, go ahead and sign up on theinvestingcircle.com. I hope you all have a great rest of your Friday.